Let's go to Bloomberg's equities reporter, Stephanie Hughes. She joins us now for more on the movers. Stephanie, we saw silver stocks move up at the start of the week. Now they're sliding. What triggered the reverse?
Yeah, exactly, Marilla. What a difference that a few days make. So Endeavour Silver is how I kind of focused on these silver movers here. And shares really sharply reversed course, dropping by over 11% at their lowest point, which had been its largest leg downward since October. And it had been falling fast alongside other precious metals names today after silver and platinum prices collapsed given the market tightness and potential for U.S. tariffs. I should add that Endeavour did manage to reverse some of those losses as the trading day went on, but still ended the day in the red, as you mentioned in your opening remarks there. So silver is retreating from its record high of just above $84 an ounce in late December, just given the reweighting of commodity indices, and that led to some large-scale selling, which happens sometimes. So while geopolitical tensions between the U.S. and Venezuela at the beginning of the week really brought traders flocking to safe haven assets like precious metals, those same traders are now focusing on U.S. economic data coming out throughout this week to offer more clues on what the Federal Reserve rate path might look like. So that's all just crushing a lot of the silver, TSX-listed silver names today, including Endeavour Silver, like I mentioned, First Majestic, which I had been talking about yesterday when it was well into the green, Aya Gold and Silver, and many others, Morella. So it's been a blink and you miss it kind of a trading session.
Yeah, if you didn't get in, you were trying to get in ahead and then drop back today. Let's get to Algonquin Power, a gainer today. What spurred that?
Yeah, so that stock jumped by nearly 7% at its highest point, which had made it the top TSX performer at the beginning of the trading session before it was overtaken by Definity. And it briefly brought the stock price to its highest level since May 2024. And that's because National Bank analyst Vital Sidhu boosted his team's recommendation on the utilities company to an outperform rating from a sector perform rating. That's kind of like moving a stock to a buy from a hold. And so basically they expect that the company will have its new utilities rates approved by regulators in a formal process called rate cases. So the team expects that they'll have these approved and implemented, and they'll be able to essentially charge consumers higher rates. So they forecast that this should boost earnings per share on a year-over-year basis by about 10%, up to 20% by next year. They also added that Algonquin was able to really get together a strong team that can execute, can really drive execution and focus on a disciplined capital allocation strategy. In particular, they focused on the new CFO, Rob Stephanie, and the Chief Operating Officer, Peter Norgeot, Morella. So it's that's a good endorsement from National Bank, and apparently traders agree with that assessment because you can see that reflected in the share price.
Yep, they are liking that. All right, Bloomberg, Stephanie Hughes, thanks for the update.